We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button to let me know you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index, and all the stocks this morning were pulling downwards. Now, even our SPY bot sent out a bear indicator since 7 a.m. and towards the bell, the SPY continued to fall, hitting new bottoms, and at those lows, some of these put options that actually opened up went up towards 3 to 5x at those lows. So it was a phenomenal opportunity. Our SPY bot, we just released it recently, just a few days, almost a few weeks ago, and it has been a phenomenal way to navigate through the volatility in the markets. And with 42 vision and the clarity it brings when things are actually in extreme weakness, and then the reversals. You could see it here from white with red borders to white with green borders, red with green borders, and dark green. And the next piece of the puzzle would be something like this. And this is what we're watching going into tomorrow and the rest of this week, to go from dark green to green and see how much strength this could continue with. But before we break down everything going on with the S&P 500 index, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. It managed to be a phenomenal opportunity beyond expectations. While the market was pulling downwards, this stock turned out to be a home run within the first few minutes and hours of the stock market opening up after the bell. If you guys want to get on early with us, every single morning we strive for opportunities like these. Check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump into everything here that I'm seeing in the S&P 500 index and how I feel about it. Is this a fake out or a real breakout with strength? So the home run of the day was spectacular and beyond expectations. And if you want to get on early with us every single morning, we strive for opportunities like these, no matter which direction the stock market is going, whether it's going up or down. We will continue to strive for home runs. Check out the link down below in the description to the Discord, and by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned this morning. Every single one of them turned out to give 10% to 15% from their drops and rips, but the home run of the day was spectacular, could not be overlooked. While the rest of the market was falling, as you could see, the S&P 500 index was pulling downwards in red. We managed to find PIXY in the pre-market pulling downwards, kind of consolidated there for a few minutes, got that bull indicator, full strength on 42 vision, and hit a highest point of 40% plus, guys. And even on the pullback from that dip to that next rip and transition into strength, it went up nearly 10 to 20%. If you guys want to get on early with us every single morning, we strive for opportunities like these every single day. Check out the link down below in the description to the Discord. We look forward to having you join us. Let's jump into these charts. So here we are with the S&P 500 index pulling downwards and coming right back up to where things started this morning. Now, the big question is, what's making it go up? There's no real news. There's no real catalyst. The stock is just flying higher. Now, I'm going to share with you guys a few reasons why, just based off 42 vision, and why charts are so important. And we're going to pull up Ultimate 42 vision as well, which you can now gain access to as well. The link is down below in the description to the 42 vision indicators. By joining, you'll gain access to the daily watch list, weekly watch list, and a community of investors all looking to learn and grow together, as well as the premium indicators to navigate through the volatility of the markets with clarity, to maximize on opportunities no matter which direction the stock market is going. So on the 30-minute, things have been a little bit more volatile, but when you look at it, things have been going downwards. And then we just got a bull indicator after being under a bear indicator since 4,500 back on the 20th, and we're here on the 24th, all the way down to 42, and we bounced back up, right? Same thing with the SPY. It kind of bounced off 420, 421, and it's been under a bear indicator for several days on the 30-minute. If I pull up the 4-hour, things start to look a little bit different, okay? And I stated in my last video that I posted, which was yesterday, that on the 4-hour, it's looking pretty interesting because these don't come up all the time, okay? And when they do, okay, some reversals are stronger or weaker, right? And this is a weaker one. This one was stronger when they popped up here. This one was stronger. And here we are with two of them. Weaker one, and now we're going to see if this is weak or if this is going to be a stronger one, right? And start reversing and make it look like things are going back to normal. We're going into the Fed meeting too with this type of reversal. This could be a fake out, and I'm going to share with you guys why it happened based off technicals and how it adds up in this video to the article we're about to show here on the screen. And we're going to read this together very quickly, and I'm going to share my thoughts moving forward, right? So if I pull up here the 1 day, you could see that we're still under a bear indicator, and this is going to be a significant point to know if we're at a bottom or at least trying to reverse with some type of strength. It's not guaranteed, but at least a reversal with some type of strength that could probably last a few days or a week or so, right? We're under a bear indicator here on the 1 day since way up here at 4,700. We went down to 4,200 from highs. We are down almost 10 to 15% for the SPY. And the last time on the 1 day we got the white with red borders was way back here in the correction of September into October. And things ran from 4,200 all the way to 48. Will that be the same case? We'll have to see, right? Now, when you zoom out, though, it's going to take some zooming out and focusing in here to get back to the last time we got white with red borders back to back. That was March of 2020, okay? Right now, we only have two with white with red borders on the current correction we're in, but you could see there was a moment here in this correction where it bounced from 2,800 back to 3,100, and that right there was about a 10% little bounce, and then it went back towards the lower end. So could we have one of those fake outs or breakouts? That could possibly happen. That's why we need to watch this carefully, and we will know because last time it happened, it was under a bear indicator, but no bull indicator popped up on the 1 day. Even though it's looking like it's reversing, it wasn't enough. It continued. A bull indicator did not pop up until down here at 2,500. So this is why it's so important to have this clarity, to be able to see what is going on within the volatility, to be able to maximize on the opportunities and not allow the charts to trick the eyes, right? So on the 1 day, we're still under a bear indicator. Even if we try to reverse, it's not going to be strong enough if it doesn't get a bull indicator. So why is it bouncing back slightly here on the 4-hour? And why does it look this strong on the 30-minute and it's under a bull indicator? Well, I'm going to share with you guys why. And it ties up with the points where 42 Vision is showing white with red borders. And even though it's under a bear indicator on the 4-hour and the 1 day, it's extreme weakness. And these are the moments that a lot of investors, especially hedge funds, institutional investors, and large investors, take advantage of what you would call a dip. This is a significant dip, and they call this a dip opportunity. Even though it's not the bottom, they average cost their way through it, right? So you could tell by the behavior of the chart where the dip opportunity started, and this is one of them. Okay, it was short-lived, but some people thought this was a great place to start purchasing certain stocks. It's the same thing we're seeing here, and we'll know as time unravels if this is a fake out or a real breakout. And this is the article. It says the S&P 500 index, right? The NASDAQ just staged a turnaround for the ages, making their largest comebacks since the 2008 financial crisis. It's like they try to make it look so positive, but everything is still down, right? It's not like things reverse back up to their highs or where people have their positions or their average costs. It's just a bounce, right? But it looks great and a lot of people are loving it. So don't get me wrong. This looks pretty healthy. We just need to see if this could be a momentum that can continue. But they say it here. There was no specific catalyst for the turnaround, but it came as part of what the market saw as oversold conditions. So they're basically stating that, after being in so much pressure to the downside, it created an opportunity for these hedge funds and large traders to speculate and look at it as a bargain, right? Bargain hunting. So the way I look at it is this is bouncing up, and if it does not hold, it's going to be something just like this. It's going to transition in that bull indicator going to consolidate eventually. And if we get another bear indicator, we need to see how strong and quickly it moves like this one did, because since way up here at 47, we've gone down 500 points all the way to 42. And the last time it did it here, it was 45 up to 47. That was just 200 points. That's about 5% back up. And so far, we are up about almost 200 points. So will this actually get rejected somewhere in this area, or will it continue and become a true reversal that can last for a week or so or more? Because if this just lasts for 1 day or 2 days, it's not strong enough in my opinion. And that's just a lot of purchasing power coming into the market and taking advantage of what you would call a discount. And a lot of these hedge funds and large investors are just averaging their way in, because even if it goes lower, it was the best price that they knew of today. They knew of right now. We don't know tomorrow. We don't know the rest of the week. We don't know the rest of the year. But right now, based off that article's statements, it goes to show that even on the 42 vision on the 30-minute, it was an extreme weakness. Same thing on the 4-hour, extreme weakness. And then the 1 day, this doesn't happen every day, it was an extreme weakness, all adding up and looking like an opportunity in the short term, or at least the best price that we know of and we have not seen in a long time. That's all it really was. It was based off the charts and technicals. It has nothing to do with news, has nothing to do with hype or anything like that. The Federal Reserve, though, will actually bring a reality check to all of this and either turn this into a massive push to the upside because they become more optimistic, or continue to pull things right back down and somebody or a large group of investors have actually piled in, just seeing this as an opportunity to start getting into the market, especially if they had a lot of money on the sidelines and it's not doing anything. They look at it as an opportunity cost and they got themselves in now rather than having to worry about later, because we don't know yet if this is the bottom or not. My thoughts, it could be, because we have gone down like 10 to 15%. We were looking for a possible correction. I don't see a crash on the S&P 500 index, but anything's possible, right? So my next support after 4,200 has been 4,000. If it breaks through 4,000, the next point would be 3,600. Remember that. Keep that in mind. Now, to the upside, I want to go ahead and zoom this in again, actually, to show you guys we've gone back up to 4,400. But one of the key levels I'm watching to see if there's real strength here is breaking through 4,600, which would mean another 200 points to the upside and a recovery here of at least 10% from the lows back up to the highs, right, of 4,600, and continuing to create a support and bounce up to the upside. We'll have to see, because a lot of the mega cap, large cap stocks are falling, and a lot of people are a little bit concerned about this Fed meeting, and a lot of people are stating that this is not over. This is just the beginning. But if you continue to see these things, it's not just bull traps. It's just a lot of money coming in based off technical points in the stock market, but it doesn't always mean it's the bottom or the best point. This is just an averaging cost basis type of strategy, and this is what hedge funds do, because they have millions and billions and trillions of dollars to get themselves in now, even if it goes lower, and they could just keep averaging in. But the regular retail investor, we have only so much that we could put in at a time that it's going to be important to navigate through this, maximize on the volatility, and be patient, have the stomach to endure through this, because on the other side, like I always say, this is not where investing ends. This is where it begins. As always, thank you guys so much for watching, and let's make some money.